under your contract. That is actually a defensible position for the government to take.
Might call if she found out Mickey Mouse cheated on her.
So the again, I always said the issue with the DoD contractors is you got to worry about them taking the money back in the future. And what I would say for a contractor again is, if you need the money, don't avoid it because of these issues. Just make sure you're planning for it and you're looking into the future, saying that, hey, I may have to recover this. So your PPP loan may get forgiven, but the government's going to ask for it down the line. And if you think about it from one position, the government is saying that I'm paying you twice for your G&A overhead and other expenses, and the government doesn't like to pay twice, as we all know. So that's the PPP loan, and now we'll segue over to Section 3610 of the CARES Act, which was our original.
Put in one or two questions that we have. So the first question we had was, does the discussion, I guess, as it relates to the PPP, apply to the intelligence community at all as well? And then it also goes on, what about Fed Civ agencies? I think you've already probably covered that a little bit.
Yeah, right now the guidance is only from the DoD, but generally, once the DoD acts in a certain way, other agencies are going to follow. It's going to be hard for other agencies to justify not doing it if DoD is doing it. Once they get out there and everyone starts thinking about it, I think you're going to see it go through multiple agencies. So I would just assume everybody else follows the DoD's lead on this.
And we had one person request if you could go through the safe harbor provision again.
Okay. So the way the safe harbor provision works, it applies to the first wave of PPP loans. So if you've received a loan already, and now you're second guessing whether or not you should have because of the guidance that came out yesterday, you have until May 7th to repay the loan in full. So if you return the loan in full to the bank by the 7th of May, you will, you're off the hook. The government will deem your initial certification as being made in good faith. Again, that does not, I don't think that applies to the second. Actually, not that I don't think, I know that will not apply to the second wave of funding, because the language in what the SBA says is, now that this guidance is on the street, if you second guess your certification, please return the money. So if you make the certification today or Monday, the safe harbor will not apply to you. So
what are some penalties if the government does decide to go after someone? They have that $100,000 line of credit available. They got the PPP loan. They don't take advantage of the safe harbor. What are the potential ramifications here?
Well, I think absolute worst case scenario is the government could say that the certification was false and fraudulent, and that becomes criminal liability. And that becomes criminal liability for the company and then whoever it was who made the certification. That's a worst case scenario. I don't see them, applying that willy-nilly across everywhere. There's probably going to be a sliding scale. If you made a good faith certification but you were wrong about the money, they may ask some repayment with some penalties. If they deem that your certification was false, they could bring criminal charges. I mean, this is the classic case where a prosecutor can add in counts of wire fraud, bank fraud, mail fraud, and all kinds of other fraud and build a 36-count indictment. Not saying that they will, but you got to understand, making a false certification. Government contractors understand this. If you falsely certify an invoice to the government, you face criminal liability. Falsely certifying a loan application to the government is going to be the exact same thing. And that brings us to 3610, which is Section 3610 of the CARES Act. The DoD has issued a class deviation with a new DFARS clause that came out last week. DOE has issued one as well. They're basically reiterating what's said in the act, and you know, they are fairly liberal in their interpretations under 3610. This is why I would say if you're a government contractor whose business has been interrupted and you've had a drop in income because the government's closing positions or closing offices, 3610 is a much better and safer option for you than a PPP loan. All right. And what I tell people all the time, and I've been advising clients in discussion with my colleagues, is when you look at these programs, you really need to start with what the intent of the program is. And what the government said in the CARES Act with 3610 is they want to keep their contract workforce in a ready state. So what does ready state mean? Ready state means that when the government says, I'm going to open my offices on Monday, they want 100% of their workforce back on Monday. So if you're a contractor who had to lay off all of your employees because the government shut down an office and you had no income coming in and you couldn't pay them, they're not going to come to work on Monday. So the government wants to be able to cover you, wants you to pay them to keep them on paid leave, even though they can't work. And then the government will reimburse you for those costs. Now, the key word to what I just said is reimburse, and we'll talk about that in a little bit. So you do have to upfront the money to your employees, but this is a way to make sure that that money gets back. And the government, again, the guidance is, now, if you read the actual statute, the statute says is, you know, funds made available to an agency by this act or any other act may be used under 3610. So it's not mandatory. So if you're a contractor and you think that you fall under 3610, before you decide to start using it, you really need to talk to the contracting officer and discuss it with them. The guidance and the Q&As that came out from the DOD last Friday, all over that guidance, they keep referring to the contracting officer, case-by-case basis, et cetera, et cetera. So, you know, it's not mandatory. The class deviation says that, you know, it's imperative to support contractors. So the government and the contracting officers have their marching orders in order to implement this wherever possible. But you have to be able to show that you need it. So my advice to you is if you're in a touch and go financial situation and you're not sure you can afford to pay people 2 or 3 weeks of leave and not get reimbursed, you need to talk to your contracting officer before you start doing this. Now, so let's talk about who 3610 covers. Now, if you're a government contractor who's considered mission essential and you're still working, 3610 will not apply to you writ large. 3610 is going to apply to the contractors whose offices have been closed and whose employees have no other way to get work done. So if you're an employee who has to work in a SCIF and that SCIF has been shut for a quarantine and you don't have the ability to access classified material from another site that's approved, you would qualify for 3610. If you're a contractor who does the cleaning and janitorial service to a government office building, and the government office building has been shut, and they say, hey, we don't need any cleaning or janitorial services, you qualify for Section 3610. So those are the big picture contracts that apply to. It's going to be to cover employees who can't work, and the government is saying, hey, contractor, pay your employees and then come to us and seek reimbursement for covering paid leave. Now, what is exactly covered here is they will cover 40 hours of paid leave for your employees. So if you have 10 employees who are working on site and that site is now closed and they can't work, you can pay them up to 40 hours of paid leave, and then you can submit for reimbursement to the government. Now, here's where I say that 3610 is a much better option for a contractor than the PPP loan, regardless of the seeking redress of PPP loans. All right. The class deviation in the DFARS clause says you can seek reimbursement allowable at the appropriate rates. Okay. So when I read that as your fully burdened hourly rate that you're charging the government now. So this isn't just salary. So you pay an employee the salary you're paying them, and you submit a claim to the government or submit an REA to the government seeking with your fully burdened rates. And what I would say to the government, if they ask you about that, is if you want me to remain in ready state, that means I need to keep my payroll person, I need to keep my HR staff, I need to keep my IT staff, and I need to pay all my overhead and G&A employees as well. So the way I can do that and stay in a ready state is I seek reimbursement at my fully burdened rates. Now, if you're getting a PPP loan and you're paying employees, you're just covering salary. It's not necessarily going to cover all your overhead and G&A expenses. So on one regard, I think 3610 reimbursement is a much better deal that way. The other side, the other thing that makes it better, there's no salary limit to 3610. So if you have a high-end Intel analyst or a fancy IT guy who's on contract to the government, who's making $120,000 or $130,000 a year, you can get reimbursed for their entire salary during this period. As we know with the PPP loan, everybody's salary when you were making calculations was capped at $100,000. So again, and I'll go back again to the purpose of Section 3610. The purpose of 3610 is to keep your employees accessible so they're there when the government reopens. So that means, paying them as they're paid. So I think when you talk about getting reimbursed at higher salary employees and at a fully burdened rates, I think the purpose of the act strongly suggests that you can do so. So that's what they pay. Now, there's also some additional guidance relating to employees where the government office may be open. And this is, again, another place where I want to read exactly what the DoD said in their FAQ guidance. And that is, there is considerable discretion to treat paid leave as an allowable cost under 3610. And what they go on to say in this section is if you have an employee who works on site for the government and the government office is open, but that employee is not able to go into the office because that employee has a compromised immune system, that employee needed to take 2 weeks of leave to quarantine because they were exposed. That employee needs to stay home to take care of school-aged children because the schools are closed due to coronavirus. And in any of these events, that employee is not able to work during the quarantines. The guidance from DoD is that person can be covered under 3610. So let me stress that one more time. It doesn't have to necessarily be a contract where the office is shut down to seek 3610 reimbursement. You can seek 3610 reimbursement for employees where the employee themselves have to quarantine and are unable to do their job. The government may give you a little bit more pushback when you go to the contracting officer for something like this, but the DoD's guidance across the board suggests that this is something that should be covered under 3610. So you may have a contract and you may be working as normal, but you may have 2 or 3 employees who are not, and they're at home. And if you're paying those employees and giving them paid leave while they're there, you can then go ahead and seek reimbursement under 3610 for that. Again, that's where you need to talk this over with your contracting officer before you necessarily make decisions and push forward with submitting for reimbursement. Okay, and while we're talking about how you get reimbursed, the process is basically you put in an REA. All right, you're going to submit a request for equitable adjustment and tell the government, here's what I'm seeking. Now, you need to treat it as an REA as you would under any other contract. All right, if you're going to submit an REA to the government, you're going to provide a narrative explaining to the government why you're submitting the REA, what justification you have for it, and why the government should pay it. All right, if you're looking for payment under Section 3610, you need to do the same thing. You need to explain to the government why you believe you qualify for 3610 relief, as well as submitting the invoice for what is being covered. Again, so don't take it for granted. Don't just submit an invoice. Don't go after this like it's low hanging fruit. You need to make sure that you explain properly. All right. And I'm going to say this is like any other issue while you're dealing with the government. Your first approach to the government for something like 3610 relief is going to set the tone for how the government responds. So, you need to be direct and say, hey, here's why I rate this money, but you also got to go in understanding that the money's not mandatory. The government and the contracting officer get to make that final judgment. So the tone of your approach to the government needs to really be appropriate. If the government thinks you're coming in heavy-handed or trying to take advantage of the situation, contracting officers may dig in their heels a little bit. And as this is a maybe eligible for 3610 relief, the government said that this is not going to be covered by the disputes clause. All right. I haven't dug into that fully yet to figure out if there's going to be a possibility of a claim in a disputes provision down the road. But right now, what the government's saying is, hey, this is not a mandatory program. This is how we're offering to help you out. The contracting officer has discretion here. If the contracting officer denies this isn't covered by SECA, and you don't get to put in a claim and then appeal a claim to the Board of Contract Appeals. All right, this is a discretionary program. So that's the government's point. I haven't researched it enough to know if I fully disagree with that, but I can see what they're saying. What they're saying is, this is a possible lifeline. It's not mandatory, and therefore you can't sue us for this money if we say no, we're not giving it to you. So again, PPP loans versus 3610. There's the certainty on one side with all the red tape and strings attached. There's a little bit of uncertainty on the other side. So if you think you're eligible under 3610, and you've gotten a PPP loan, I would work very hard over the next 2 weeks in your in socializing with your contracting officers to see if they're going to give you 3610 relief. You've got 2 weeks under the safe harbor provision before you have to return a PPP loan. So in that 2 week time, you should be able to determine whether or not you qualify for 3610 relief and return the PPP loan in time.
Lewis,
so
quickly, there was one question. This is Merit. There was a question about the FFCRA, the Families First Coronavirus Response Act, because that does have provisions allowing for sick leave, for employees under certain circumstances, and within those certain circumstances, the employer can get tax credits for providing that.
It's like you read my outline, because my very next topic was the caveats. Yep. And in big capital letters with exclamation marks, I wrote no double dipping.
Yeah.
And that is a very good question, and it's exactly on point. You cannot get 3610 relief, which is basically providing paid leave, and then turn around and seek a tax credit under the FFCRA for providing that paid leave. It's got to be a one or the other. So this is something that's very, very rife with risks. right? Because I can see government contractors and their accountants making a honest mistake on this process. Because your accountant may, hey, you gave paid leave, so we're going to, we're going to apply for this tax credit. So you need to be very, very diligent, and pay close attention to make sure that you're not seeking tax credits if you've gotten reimbursed for 3610. So the way it would work is you provide the paid leave, you just submit the REA under 3610. If you get reimbursed by the government for those REA for that, you then don't take the tax credit. If you don't get reimbursed, you take the tax credit. What we really need to unpack on that issue is if you get reimbursed under 3610 and you get reimbursed at a fully burdened rate for your on-site employees, can you then seek a tax credit for your employees that are on G&A and overhead? And frankly, at today, right now, I can't answer that question, yes or no. And that's something that is going to have to be examined a little bit closer. And I think, that's going to be something that we're going to have to ask the DOD for some further guidance, or the government for some further guidance on that. Because on one hand, you would say if you're getting fully burdened reimbursement, you're covering your overhead staff. So you shouldn't take a tax credit. On the other hand, if you're giving your overhead staff paid leave, you're not necessarily getting reimbursed for that directly. This is definitely in a shade of gray, and I think could cut both ways. So stand by for a little more guidance on that. But the big picture here with 3610 is if you do get paid for that, if you do get reimbursed for that paid leave, you cannot then seek the tax credits in the future for providing that paid leave. So again, if you think there's a remote way the government can say, hey, you're double dipping and asking for this payment twice, you need to reach out to us so we can kind of parse through the regs and the guidance from the government to figure out whether that's a risk or not. And so I believe actually I'm at the end of my outline. So if anyone's got any questions, I knew there was a lot. I did a lot of talking, and my voice is a little hoarse here. But if anyone's got any specific questions, we can go around the horn and open up for some Q&A at this point.
Great. Well, Louis, this is Merritt. Let me go ahead, and there's at least one through the chat function that I haven't touched base. I have at least one or two from email also, and then we'll go through alphabetically if folks have questions via telephone. So number one is, we're a sub on a government contractor with a prime that does not qualify as a small business. Some of our employees have been asked to sit at home because they can't go to work because of the COVID situation. Will Article 3610 apply to us?
Article 3610 is not like the PPP program, and it is not limited to small businesses. The government, right? The government can turn around and say, "Hey, I'm not gonna pay you, Lockheed Martin, because you have enough money in the bank." But that does not mean that they can't. Obviously, if you're a sub, you've got to submit your REA through your prime. But this is not. You're not exempt from 3610 or barred from 3610 because you're a sub to a large business. In fact, like I said, the large business is able to seek this reimbursement as well. Again, I always hearken back to the purpose of the statute and what the Congress is trying to accomplish. And what they're trying to accomplish is to keep the government contractor workforce available and ready to restart. So this is not like PPP loans where only small businesses qualify. This goes across the board to any government contractor. So if you're a sub, you need to reach out to your subcontract administrator at your prime and ask them how they want you to approach that. If the large business is digging in their heels and not helping you, call me and I'll call the large business for you and we'll get it sorted out. So again, yeah. So as a sub, and I meant to include that earlier, this includes subcontractors as well. It's meant to cover the the contractor workforce, no matter who their employer is.
Gotcha.
Sir, I'm sorry, if you don't mind, I just have a follow-up question. This was my question originally. In the process, we have actually just recently, just yesterday, we've gotten PPP loan as well. So does that change anything for us? Like, should we use that PPP loan to pay, these employees who are sitting at home, or should we still pursue under this article?
What I would advise you is I would reach out to your prime, to your subcontracts administrator, or whoever you deal with, and ask them about Section 3610, and ask them about you submitting an REA through them to the government and trying to get an answer on that in the next 2 weeks. If you can get an answer on that in the next 2 weeks, and you can get reimbursement for 3610, I would think about returning the PPP loan and using 3610 instead. I think it said, the 3610 has less risk for you. There's less way of the government coming down the road and questioning your G&A or seeking some other credit. And if any of your employees are being paid north of $100,000 a year, they'll be covered under the 3610. So it's, if you can't get an answer and you've got employees who are shut down and you're paying them, and you can fully support you needing the PPP loan, I'd say go ahead and keep it and pay your employees. But if you can get 3610, I would encourage you to do that, because I think it's going to be less of a headache for you in 6 months from now.
Gotcha.
If that makes sense.
Well,
thank you.
Along those lines, Louis, there's, I think, clarification. You have this good faith obligation to affirm that you don't have other sources of liquidity. How do you define other sources of liquidity? Does it go to the business owners has a $500,000 of equity in their home, or how do you define that? How do you know whether or not you should refund the PPP money you received?
Well, I mean, I think they're going to look solely at the company, not the owner's assets. So, like I said, I think the owner is okay. They're not going to try to, like I said, as I said earlier, I don't think they're going to ask you to put a second mortgage on your home in order to keep your company floated. But if your company has, if your company has a line of credit or if your company has no debt and has the ability to get a line of credit, that could be conceived as you having liquidity. So, I mean, if you're a well-run company that's got a healthy balance sheet with no outstanding debt on your out there, then you may have the obligation to take a line of credit instead of taking a PPP loan. My concern with this is the government's going to continue to slide down the hill and take a more aggressive approach on what qualifies as, what is, you had this liquidity. And if there's a way you can avoid that problem, I would absolutely try my hardest to avoid it.
Yeah. And along those lines, if you talk to that, the government might try to get the PPP money back somehow if you're a government contractor. If you have a fixed price contract, how would that work?
Well, firm fixed price contracts a little bit more complicated, both for seeking 3610 money and under a credit back. So obviously, if you got firm fixed price, the government's going to need to give you a mod to move money around on the contract, move it from one CLIN to another. So obviously, if you're a cost plus type contractor, it's a little bit easier. For you to get your reimbursement. But so for firm fixed price, look for a mod moving the money from a billable CLIN to a new CLIN. And for a PPP reimbursement, the government's probably going to look at some of the rates and buildup of your contract, and then seek some reimbursement for G&A and overhead as part of your buildup. under your firm fixed price. You'll submit an invoice one month and you're going to get paid a lot less because the government's going to apply a forgiven PPP loan credit to your invoice.
Gotcha. Why don't we do this? Let's open it up for questions from folks on calls. So why don't we say if your last name starts with A, B, or C? Anyone have a question? A, B, or C? Now let's just keep going down then through the alphabet. D, E, or F? Someone have a question? Well, let's just open it up in general. Any questions from anyone on the telephone?
Yes, I have a question in regards to the firm fixed price contract. We currently have firm fixed price contract and being told by the government not to start the individual until the government comes through this teleworking. And now with those costs, because we've been on this contract for a while, and of course the firm fixed price had covered that. And so now we're thinking that we haven't gotten the modification for it yet, but this sounds like that's what they'll need to do is a mod. But if we didn't do a mod, would that be covered under the 3610, or do we kind of?
Well, the way the 3610 would apply under a firm fixed price contract. So if your contract was, $100,000 a month, just using round numbers, right, and 1/3 of your workforce couldn't work on site, and they couldn't work at all. They would have to move 1/3 of that money, $33,000, from your billable CLIN and create a new CLIN via a mod and move it to reimbursement for paid leave. But if you have an employee who the government says, hey, they're not able to work until we get the telework set up in place, that's the exact type of employee that's meant to be covered by 3610. So you would need to engage with your contracting officer, reach out to them and say, hey, I'm paying this employee. I want to continue to pay them paid leave. I'd like to see about getting reimbursed for that paid leave through the section 3610, and then see what the contracting officer says. Again, I'll caution it's the approach, right? You rate the money if you're paying the employee to leave, but it's not mandatory. So the government, we can't jump up and down and demand that the government pay the money. We got to go nicely and say, hey, we're doing this great thing for our employee, government, and I'd like for you to help me continue to do that. That's the approach I would take. But you say 3610 to the contracting officer, and you say you're paying paid leave, they'll know what to do administratively on their end. But look for a mod to your FFP contract.
Okay. All right. Thank you.
You're welcome.
Any other questions?
Yeah, I've got a question for you about PPP and how it relates to 3610.
Sure.
Okay, so my plan, and maybe there's others in these situations as well. I've already got my PPP money in hand, but I do plan to invoice under 3610. But the timing for that, we haven't been able to do that yet. We usually have about a 45-day turnaround for the cash to show up. So my plan was to use PPP to cover payroll until that time and then pay PPP back. But with the additional guidance, it sounds like it came out kind of at the start of this conversation. It makes me a little nervous.
Well, no, if you're a small business and you've got lag to your invoicing and cash flow, you can justify what you're doing. I mean, if you go back to the SBA, if the SBA ever comes to look at you and say, like, why did you do this? You can say, listen, I needed the money today, and the government wasn't going to pay me under 3610 until June. So that's why I took the PPP money. And the issue here, too, with PPP and 3610 and double dipping is it's the forgiveness and the forgivable part of the PPP loan that is the issue. So if you get a PPP loan and you use it to pay your employees, then you submit an invoice under 3610 and you get paid under 3610, like you said, just pay the PPP loan back. The terms and the interest are so low just forget about the forgivability part and pay the loan back. And this way you're not double dipping. You're taking the PPP loan and using it as a life preserver in the short term, and then you're paying it back when you get compensated otherwise. That's how the program was designed to be used. So as long as you're doing that, I think you're perfectly fine. And again, let me stress, it's the forgivability on the PPP loan that creates the problem. So if you pay your PPP loan back at any rate or any time, you kind of avoid the government coming after you for credits or other issues down the road. So that's the other angle here with PPP is just pay it back when you can.
All right, thank you.
Sir, I have a question on the PPP loan. So I'm looking at the note that we just signed yesterday, and it says as long as 75% of your expenses go towards the payroll and other qualified, business expenses like mortgage, rent payments, etc., this amount could be considered, for forgiveness. What was the statement that you were pointing to earlier that could deem, like, if you were to double dip or something else, that you could be entitled for fraudulent activity or something like that?
Well, so that came out, the SBA piece on the certification came out in response. So the SBA has been fielding a bunch of questions and then publishing their responses through FAQs. And they published out an FAQ yesterday about the certification of whether or not you need the money. So that is published by that way through the FAQ and the regs. It's not going to be in your note. The issue with the DOD seeking a credit for forgivable loans down the road was again addressed in DOD guidance and answers to FAQs. So they're going to say, and the DOD is going to say, if the government gave you money and you use that money to fund your operations, you need to, and I'm paying you under your contract for your operations, you need to reimburse me for the loan that became a grant. That's what they're saying. And they said that you're not going to see that in your note per se. That's going to be in the regulations and the rules and the other guidance from the agencies about the program.
Gotcha. Thank you.
Sure.
Any other last questions?
So, and actually on that forgiveness part on the PPP, I'll throw one more caveat out there, and I'll throw a plug for us for next week. So there's actually a couple of different ways PPP loans can lose their forgivability, based on your employee headcount, salary reductions, and the 75% rule. The interplay between all three of those is kind of convoluted, and there's poor guidance because one of them is a percentage reduction and the other two are dollar for dollar reductions. The government hasn't told you in which order to do the reductions. So do you do the percentage first and then the dollars, or do you do the dollars first and then the percentage? But we're digging into that still, and we're gonna host another webinar next week covering PPP forgivability and how it is implied in the interplay and how the scale works. Because it's unfortunately way more complicated than the 75% rule. So stand by for notification on that next week. So if you have a loan and you're curious on how the forgivability is going to work, we'll cover that in a lot more detail next week.
Yeah, that'll be very helpful. Just a quick follow-up on the forgivability here. If we let go of some employees because they are just being non-productive and working from home, but we end up hiring someone else in that role, would that constitute that, we are not going to be eligible for forgivability, or would that be okay?
No, the PPP issue on headcount is a generic average FTE headcount. It's not, you don't need to keep John Smith hired for 10 weeks if John Smith is a bad employee and doing other things wrong. You can fire John Smith and hire somebody else in that role. So it's overall head count, not specific employees.
Gotcha. Thank you.
Great. Well, I think with that, we'll wrap up. Please do not hesitate to contact us if you have any questions about these or other issues. We've been working with a lot of clients on not only government contracts issues, but also COVID-19 related employment law issues, the impact of on contracts, litigation, insurance claims. So we're really here to help businesses and government contractors however needed in the area. If you haven't, please visit our website, generalcounsellaw.com, or just gcpc.com, and we'll look forward to helping you. Thank you so much, and take care, everyone. Stay safe.